Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, September 16, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, we have a lot of stuff on the docket this week. Let's go through some housekeeping stuff. What do we have on the docket? First and foremost, we have what's called quadruple witching options expiration week. It is regular way options expiration week. You have stock options expiring, futures options expiring, options on options expiring. It's quad witching options expiration. It's the quarterly expiration. It's meaningful. Expect some volatility / weird stuff to happen. Item number 2, we have the FOMC Federal Open Market Committee meeting, the Kabuki Theater Week. The markets are expecting a policy change. What does that mean? That means the markets are expecting a minimum of a 25 basis point interest rate cut out of the Fed and Jerry's crew. If the market doesn't get their interest rate cut, it could be lights out. The Fed has been pretty good over the last several years of telegraphing exactly what they're going to do and then do what they telegraphed they said they were going to do. So we'll assume that's going to remain the case. They've telegraphed a quarter basis point cut. That's what we're going to go with. Whether or not the market's expecting more is subjective. If the market goes down and they have issued a 25 basis point cut, it's easy for the media to hop on and say, well, the market was expecting a 50 basis point cut. Well, we don't know that. They told you 25 basis points. That's what we'll go with. FOMC week, Kabuki Theater. We also have what's called a harvest moon. It's a new moon, it's a full moon. That occurs on Tuesday. Because it's the quarterly expiration, we have the futures contract roll, which means the ES contract, the S&P futures, the NQ, the NASDAQ futures, the RTY, the IWM or Russell futures, all roll into the DECE or Z contract, December expiration contract. This is all part and parcel to this quarterly expiration, regular way options expiration, quadruple witching, all that stuff. A lot of activity going on around the market complex. What do we got in terms of the spiders? They're above all the moving averages. The trend is your friend until further notice. For now, we still have a lower high situation. We have highs, we have lower high, and we have not made a higher high even to the last most recent high. But here's the deal. They're a chip shot away from the all-time highs. That's all we need to know. They're an economic data point away from the all-time high. They're a Federal Reserve comment away from the all-time high. They're a quarter basis point interest rate cut away from the all-time high. Can they make all-time highs this week? Absolutely. Can they collapse before or after an all-time high and have a decent pullback? And the answer is absolutely. Both those things can be true. Let's flip over to the weekly chart and let's look at this thing objectively for a moment. So a couple of weeks ago, they come down, they settle on the trend line and the 20-period moving average. Last week, have a rocket ride back up, and we'll just say near the all-time highs. Doesn't matter specifically. Don't have to be precise for this one. Why? Because they closed last week above the high from the big time breakdown candle from the week before. So the high from the week before was 560.81. Last week, market closed at 562.01, not even close. They eclipsed and closed above the prior week's breakdown candle high, which is a bullish sign, period, full stop. Doesn't guarantee anything happens, but on its face, it's bullish. So therefore, until or unless we come below, she comes below the high of not last week, but the weeks before breakdown candle high, then we're going to say she's in the most bullish position to get to and make a new all-time high. And by the way, did anybody make money today inside the live room, inside the numbers? How'd we do with the numbers? How did our trading go today? Did we make some money? Help a brother out. Post some comments under the video for folks that are in search of the answers. Is this a place you can find answers? You know the rest. Do you find value? Do you make money? Both things are true. Let's hear about it from the existing members of Inside the Numbers and the live room. How'd we do today inside the numbers? Happy Monday. Here's the early commentary. This is the 0 dark 30 stuff. Let's see what we had on the board early. Looking upward, we had 563.35 as the next target / number in the sequence. They came close. They still didn't get there. They came close on Friday. They came close today. They're still about 20 cents away or so. We had a pivot today. Where was the pivot? 561.50. What if they're below the pivot? Where do they go? Right around 560, big fat round number for starters. Before we drill down to the intraday stuff, let's put it in perspective. The high and low today weren't that far apart. The market had a very narrow range today. High was 563.11. The low was 559.90. That's 30 S&P handles. In the big scheme of things, from a total intraday range, that's a rather narrow day. There's a 5-minute chart. Right of the vertical is today's activity. 561.50 is the pivot. Above, she's bullish. Below, she's not. You can see what happens when she gets below the pivot, fights back to it. Until she gets above, it doesn't turn bullish. It's good and handy. Handy's a technical term. Handy to know your pivot each and every morning. Getting below the pivot, she can fall back to 560 for starters. 560 was identified at 0 dark 30 this morning. And you can see 560 minus a couple of pennies was essentially low of day. Funny how that works. Let's see what else we have as the day gets underway. What's the 9 o'clock commentary? This is the morning schematic, as I like to call it, the early morning schematic. This is where we get, where's the trade going to happen? What's the setup? Well, we got the pivot, 561.50, fair enough. Below, they can go down to 561, that's not that far away. But below 560.80, the door opens to run a test of a little bit lower than 560. They don't have to get there, but can. This is all the awareness stuff. And then if they get above the pivot, where do they go? 561.95, that's the gap. Above the gap, 562.60, and so on. There's a bunch of numbers in here. It was bunched up. That's another technical term. Let's scroll up further, see what else we have. Day gets underway, staying above 560.80, and she bounces back toward the pivot, 561.50. By the way, I just want to be a little more specific with this early morning schematic, if you will, that comes out 9 o'clock, long before the opening bell. Because I know some of you don't take the time to pause the video, read the notes, and go back to the chart to double check the work. So, if they open below or get below the pivot, and this is important, I'm going to explain why in a moment, we're looking for a bounce back from around 561, give or take. And you see a spike of 561 brings you down to 560.80. We identified that earlier. This was the first trade of the day right out of the gate, right? Low of this candle here was 560.82, 2 pennies above the 560.80. Bounced them back to where? For starters, right back to the pivot and beyond. Traders were buying it at the pivot, below the pivot, for a bounce back to above the pivot. That is one of our favorite morning trades. It's the test the morning pivot, spike the pivot, bounce them back above the pivot morning trade setup. We have a small bucket full of morning trades that we do in the live room and inside the numbers. Traders don't always exactly recognize which trade is happening in real time, but we talk about it after the fact. This was one of those trades. We have, let's just say, 4 or 5 morning trade setups that we use. This was one of those around the pivot morning trade. You see me describe it in here all the time. Pause the video, read the notes, go back to the chart and double check the work. Above 560.80 is the case back to 561.50. That was the pivot. Below 560.80 on candle closes is the case to fall more. They didn't do that right away. They did it later. To where? First toward 560, give or take. They did it later. And by the way, it produced what? You got it. Another trade. 949, there's your bounce from the zone below the pivot and back above 560.80. Above the pivot, she's bullish for the gap and higher, like toward 562 and higher. Nice trade. 20 minutes into the day, we had a plethora is a trader term, of profits in the live room from traders that took the trade, waited for the bounce, got the bounce, took the profit. Nice way to start the week. Nice trade. Above the pivot, she's bullish / floating. Pause the video, read the notes, go back to the chart, and double check the work. If they stay below 560.80, 560 to 559, give or take, is a short-term support / bounce zone. So there's trade number 2 opportunity. By 1037, there's your bounce from 560, give or take, back above 560.80. That's the minimum required base hit. 5 to 7 S&P handles, that's the minimum required base hit. Then we hold a trailer for the rounding first stand-up double or more. Same progression of events, 1044, and so on. Pause the video, read the notes, go back to the chart, and double check the work. Your morning trades were in here, then the market goes to sleep. We're air quoting, waiting on the Fed. We'll get a little bit of a morning rush tomorrow, and then once again, we'll be, air quotes, waiting on the Fed. What's going on with stocks on the move today? We had Apple, we had Micron, we had Upstart, and GH. Let's take a look at all 4 charts, and we'll describe what happened. We'll start with Micron. You see the number 87.15, 85.75. They never got to the second number, spiked the first, bounced it back up, and kind of hung around the first number all day long, a little bit above, a little bit below. No harm, no foul. Some traders got a little bit of a base hit out of Micron. That's fine. Upstart opened below the third number, takes it officially off the table. They went lower, ripped it back up in the other direction, right back to the first number originally, but this one's off the table. If it opens below the third number, I don't want it. Something's different than I thought it was in the pre-market, and therefore we just leave it alone. Look at this one. Guardian Health, GH, opening print today, 2308. Number, 2307. Low of day, 2307. Hit it, ripped it back up in the other direction. Same candle, they were at a high of 25.90. You don't see this every day. You never know which ones are going to give you the rocket ride. In this one, you had to have an order in before the whole thing happened. You haven't had an order in, had to have an order in the pre-market for the regular session only, and you had to have it in at 2307 or 8. You may have gotten filled at 2307. You would have gotten filled at 2308. And you would have gotten a rocket ride. And yes, we did have some traders that participated in that quick rocket ride. And Apple, here's the zone for Apple. So they did have a nice bounce from the second number back above the first. And then they hovered in this zone pretty much the majority of the day before getting back to the first number and closing the day out this afternoon. What we'll say here is it pays to know your numbers. The numbers do work. Now, what's going on over in Camp IWM? Nice big day on Friday, above all the moving averages. The trend is your friend. What are they doing? They're working their way to the higher end, the vicinity of a breakdown candle high. There's an unfilled gap up there. There's a couple of important pivots around here. So all in all, just looking at this from a common sense, objective perspective, there's going to be a lot of resistance around this area. So we'll say between 219 up to 222, 222 and a quarter, in that neighborhood, big time overhead resistance for Camp IWM. However, above all the moving averages, the trend is your friend. Above all the moving averages on the daily chart, weekly chart, there's nothing wrong with the small cap index from a larger picture perspective. Period. Full stop. We are the umpire calling balls and strikes. However, everything morphs from something. Here you also do, and we look at things from both sides. Umpire again. We have a high, we have a lower high, and right now we have a lower high, but that could be taken off the table if she makes a new high. For example, something happens this week to send the market up to make a new high, not a new all-time high, but a new high here. That would take the lower highs off the table. Fair enough. Today we have what we have. We take it at face value. Our awareness is to break the chain of the lower high situations. This is bearish. Lower highs are bearish. Above all the moving averages is bullish. Both things can and are true at present. What about the folks down at the transportation department? Here we go again, flirting with the trend line. We've got a triangle. She tested it last week, couldn't get above. All of a sudden this week, we're opening and we're hovering right on the trend line. Do you think the market, Mrs. Market, knows about the trend line? And the answer is yes, she does. Above, she's bullish. Below, she's still in the channel until time is up. Time will be up when we get to the apex of the channel. She can break out over the top and below the bottom at any point in time. Does not have to wait. I repeat, does not have to wait till the apex of the channel. Big week, Kabuki Theater, full moon, new moon. By the way, at the end of the week, after this week's over, we have the fall equinox. We have a lot of stuff going on. What about the Q people? We'll reiterate, above all the moving averages, trend is your friend. Lower highs is a bearish signal. Both things can and are true, can be and are true at present. High, lower high, same thing we just looked at with Camp IWM. And here's a lower high. Now this could break the chain if they get above this high here this week, for example. It is possible. We don't know. What's going to prevail? The low and the higher low, or the high and the lower high? Can you do that with trend lines? Is that valid? Sure, you can do whatever you want. It's part art form, part science. If I have two pivots, you can connect them. If it makes sense to me, if it makes sense to you, then it makes sense. If it makes sense to me and it doesn't make sense to you, it may not make sense. That's okay. That's what makes a market. 2 people, 10 people, 100 people look at the same set of information, the same data points, the same chart, the same information. It doesn't make a market. XLF, remember this from last week. So in a sense, what did they do? Not in a sense, but what did they do? They came down to run a test of the most recent breakout area, bounced them right back above the 20-period moving average today. Period. Full stop. That's what they did. Period. Anything wrong with this chart? Above all the moving averages, trend is this chart. What about SMH? Contained. This chart looks different. Contained by the 20-period lower highs, and you have potentially more lower highs. Can't even get above this breakdown candle high right here, right? You got a breakdown candle high, 20-period moving average, right above that, convergence of a 150-period moving average. This is in a downtrend. This is a different chart than all the rest. This is a good proxy for the tech space. Can you do that? Sure, you can do that. What happens if she breaks out above the top trend line? Well, that's more bullish than it's not. What does that do? Sends you right into the convergence of those moving averages, fill the gap up here, and this puts you right around 242, 243, up in that neighborhood. Weekly chart, above the 50-week moving average, she's okay. Above this low, she's okay. That's a good low, but below the 20-week moving average, and until you recapture it, she's on the verge of not being okay. There's a difference between not being okay and on the verge of, and potentially could be leading to not being okay. Right now, she's okay. But don't lose sight. Semiconductor index is a good proxy for the tech space as a whole, and the tech space is a market leader to the rest of the market. And if there's a problem in tech, it can certainly and does certainly bleed over in a hurry. Hey, by the way, have I told you how much I appreciate each and every one of you? Without you, these videos, they're not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, MyStrategicForecast Market Analysis.